Right. And so when you go knock on the door of this,
Mm-hmm.
whoever's running this landfill, and you say, hey, by the way, we want to buy all your methane off you,
Mm-hmm.
and we're going to solve your regulatory issues with
Mm-hmm.
regards to this, and we're
Mm-hmm.
going to pay you for it,
Mm-hmm.
and we're just going to put this container on the side, and you're going to make money from it. Are they like, are you fucking, oh, yeah, and we're going to do it with this Bitcoin thing. And they're like, are you mad?
People, yeah, that's basically so there is definitely an educational aspect to it. I mean, everybody sees that there's a very clear value proposition that we bring to people. So, for example, our pilot site, so they're on the hook for $1 million upgrade to their flare. And the whole purpose of this flare is this fucking massive thing. I mean, it's the size of, a 4-story building sticking out of the ground. And the whole purpose of that is to burn off the methane. There's no other purpose of it. And so they go from, having to be $1 million in the red plus another $100K a year to maintain the thing. So they go from that sort of situation to us knocking on the door and say, hey, how about you don't have to use your flare anymore? We're gonna come in and we're gonna buy your gas from you. It's sort of like, why not? The value proposition is so clear. The main thing is the education, right? And so in conversations, and again, landfills are very traditional businesses, may not have much exposure to technology, let alone Bitcoin. And one of the conversation that always comes up is, what is, how do you know that there's Bitcoin in the landfill? So you have to really sort of explain it to them from square one. What is Bitcoin mining?
Yeah.
How does it work? It's basically you're setting up a data center, you're processing. Bitcoin mining is essentially you're a decentralized auditor of the Bitcoin network, and you're getting paid for your services in Bitcoin. And so when you communicate it on that sort of level, that tends to make sense to people a little bit more.
And so, are you buying the methane off them on a fixed price, or is it per cubic meter? I don't know how they do it.
But. Yeah, so that's a great question, and this kind of leads into our mission, or one of our missions of fostering increased adoption of Bitcoin.
Yeah,
and so we actually set up a profit share. Okay. So we basically make the landfill is essentially a stakeholder in the Bitcoin mining operation. And so we have, so that sort of protects us on the downside. So, and we set a range of it. So it's basically like on the downside, when Bitcoin mining metrics are rather low, we're paying the equivalent of anywhere from 0.5 cent to 1 cent per kilowatt hour.
It's pretty good.
So that's on the low end. And that's when it's the most important to have protection and competition with other miners, right? When metrics are higher, because of this, the way that we've structured the profit share agreement, that they can make as much as 4 cents a kilowatt hour, but that the payment is capped on the high end and capped on the low end. So they can still participate in some of the upside of Bitcoin mining, but it protects both parties on the upside and the downside.
Okay, what is the risk and the trickiness with regards to Bitcoin price? When Bitcoin's $60,000, it's super profitable.
Mm-hmm.
If we suddenly dump to 20, it might not be. How do you guys protect yourself against that?
Yeah, I mean, so that's why we put together this type of profit share agreement, and so This protects us in the times where Bitcoin is low. This protects us by having a very low cost of power. When Bitcoin is high, 60K, 100K, whatever it ends up being, the maximum power cost we're going to be paying is 4 cents. And that's when it kind of matters less because the margins are so high.
There is still a risk of Bitcoin's at a certain price that you could be underwater. That is a risk you're taking.
Well, I mean, I think based on the power price, or based on our power cost in comparison to other miners, and then because of the dynamics of Bitcoin mining, other miners are going to be going offline much sooner than we will.
Right.
Be.
Okay.
And so therefore we're going to be essentially getting their share of the pie when they go offline. And so we have protection for the very long term because of that.
Right. Okay. And so when you're building out this facility,
Mm-hmm.
how do you ensure you use every bit of methane you burn off, or will there be some waste in there?
Yeah. So we always do keep a flare in sort of in line with the generator. So in the times where the generator needs to go down for maintenance, or there's some other problem, that's basically a backup solution for maintaining compliance with regulations. So there is always that backup flare that can burn off excess if needed.
You know what's going to happen? It's going to be so successful. They're going to be like, we need more trash.
Yeah.
They'll be taking trash from, they could take trash from other municipalities because they can make more from it.
Yeah. Well, I mean, it's a way of looking at trash as an asset essentially. And so, it goes from, being a net expense to the municipality and to the landfill to a value producing, commodity essentially.
It's unreal.
So, I mean, we're simultaneously, I think there's sort of three things that happen simultaneously. Number one, we have access to some of the lowest cost energy of any Bitcoin miner on the market because of the nature of the gas that we use. Second, we are solving a very clear and present issue with the climate and related to methane, and it's very scalable and measurable. And then three, there's a social implication because the ultimate beneficiary of a landfill is a city or a municipality. So any revenues that come in as a result of our partnership goes right back into the community. So that's sort of like, if you talk about Bitcoin being ESG, I mean, we've pretty much ticked all the boxes.
It's alchemy. It's actual alchemy.
In the times where you might be running a profit share, will that be paid to the municipality in dollars or Bitcoin?
It's a great question.
Ooh.
Great question.
You could be making California hold Bitcoin.
Well, that's actually our plan.
You should insist they receive it in Bitcoin. Make them deal with it. And
I'm really glad you brought that up because again, we are committed to Bitcoin and fostering increased adoption of Bitcoin. And so one of the things that we plan to do is have a slightly larger percentage, offer a slightly larger percentage of a profit share if they agree to hold Bitcoin on their balance sheet for the long term. Right. And we have a number of partners that we're aligned with that would be basically solutions for that. So custodial solutions for that.
Okay, so you're working on a pilot right now. Mm-hmm. What's the status of the pilot? Where are you at?
Yeah, so the pilot is currently under construction.
Okay.
And I think the key to success here and really with any Bitcoin mining operation is access to capital. Uh-huh. And so, after our pilot site...
And ASICs.
Right. Well, ASICs is a result of capital, right? So
yeah, but sometimes even with the capital, you can't get the ASICs.
Yeah. Well, we're fortunate enough to have really great partnerships. So we have a partnership with Frontier Mining, who they're a major co-location provider as well as ASIC reseller. So we have really good access to hardware. But then on top of that, we've recently closed a major fundraising round with some pretty big name venture capital firms, which I can't name quite yet, but it'll be out soon. So our access to capital is really going to ensure our ability to scale. And I think the faster that we can get on the market and deal with this problem, the better it is, both from a climate perspective and from a social perspective.
What is the cost to build out just one module?
It's approximate. I mean, the cost does vary to some extent depending on what. I mean, the big driver of the cost is the ASICs.
Okay.
Right. So depending on what vintage or what model of ASIC you choose, in general, it's about $4 million to build out one module. So that includes, the gen set, that includes the associated ancillary equipment, the container, and then the ASICs.
Is that car going off again and again? Sorry about that, anyone listening. It says 400 ASICs. I don't know. Were they 10,000 each? 15,000?
No, well, the prices have gone down substantially, and so this is actually one of the reasons.
Good time to do it.
This is a fantastic time to be building Vespine, because we'll be able to have access to ASICs that are below historical high lows basically.
Okay.
So,
and what's the kind of return on investment on one module? Is it 1 year, 2 year, 3 year?
Yeah, I mean a lot of that depends on the future projections of Bitcoin mining and the price of Bitcoin, and we're not necessarily one to make predictions of that because a lot of our profitability is protected, because of our low cost of power. So, if one site pays itself off in 2 years, in 3 years, it doesn't really matter at the end of the day because we know that we're going to be profitable in the long term.
Yeah. Okay. So I'm thinking in terms of your what moat you have around this,
Yeah.
and your moat really is understanding of this market,
Mm-hmm.
having built out a pilot scheme that's successful,
Mm-hmm.
but your moat really is time, I think, because if somebody else sees this, they're going to go, well, why can't we do this? And they're going to have to go through all the stages that you haven't done. So pilot,
Yeah,
then you need to raise $1 billion and go and cover every site in the US.
Yeah, I mean the moat is that's a great point. And the moat is primarily our so we are the first company to mine Bitcoin on a municipal landfill in the United States, and that is a major milestone that is going to give us first mover advantage in the market. And landfills are very connected in the sense that everybody knows each other in the industry. So if we come out as the leader in converting landfill methane to Bitcoin, we're going to be the choice provider essentially. So not only that, we're leveraging the first mover advantage as well as our access to capital and our team. So we're building out a world-class team of people from so Bitcoiners, Bitcoin miners, environmentalists, ex-government officials, and landfill operators. Putting all those people together, all those best minds, in their specific industries, putting them together and sort of ensuring our success in the market.
Is there a landfill conference or awards evening or something?
I was just there in Las Vegas last week.
Yeah, what's it called?
Well, there's two actually. The one I was at was called the American Biogas Conference.
Yeah, they've named that well.
Yeah, but yeah, I mean it is a relatively small market in the sense that there's a few key players that if we if and when we get aligned with those players, that's going to enable our expansion kind of nationwide.
Well, I'm just thinking it's going to spread quick. So you're going to have whoever you're working with, and they're going to be sat talking to whoever runs a landfill in, Montana. And he's going to say, "Yeah, I've got to build out this new flare," and he's like, "We don't have to. We took ours down. Someone is paying us for our gas." They're going to be like, "What the fuck?" Yeah, with this Bitcoin thing, they're not going to understand. It's not going to make any sense to them.
Sure. And
then you're going to sit down with them. They're going to. It's like this is what you would call a no-brainer.
It is a no-brainer. I mean, I think if you look at it from a Bitcoin perspective, I mean, we know that it's a no-brainer, right? But if you're a landfill industry insider, it takes a long time to get to the point where you can call it a no-brainer because you're not aware of a technology like this, right? And so
I guess the only risk to them if you got something wrong and the project didn't work and you had to scale out. If there's just something that went wrong, then they'd have to deconstruct the sites and build some, but they'd have to do that anyway. So
then they just go back to flaring, which they were doing anyway. But I mean, all of the technologies that we use are proven in their respective fields, right? So we're taking power generation equipment that has already been proven in landfills because landfills have power plants and they are producing power. So sending that methane to a power plant or to a generator is a very straightforward process. And then kind of combining that and marrying that to Bitcoin mining technology, which is also proven and available, kind of merging those two technologies together represents a very small technological risk. So I think again, back to the moat perspective, I think that our biggest advantage is access to capital, ability to scale quickly. So beyond the pilot site, we have 10 additional sites that are waiting in the pipeline to come online after the pilot site.
Right. So you're going to be able to move quick once this.
So we're going to be able to move quick, and then it took a while to get to the pilot site, again because of the education and the just finding the right site that was willing to take that leap of faith with us
because they thought you were crazy.
Right. Well, I mean, they loved the value proposition,
Yeah.
but at the end of the day, who wants to be the first Bitcoin? Who wants to be the first landfill to mine Bitcoin? In the United States, it takes a little bit of a leap of faith to do that, right? And so once we have that operational, that is going to spread like wildfire, and we're poised to scale very, very quickly.